Hello everyone, my name is Yogesh Bhandari and today I'm here to discuss about tax audit report. I'll give you an introduction about the tax audit as well as discuss about the applicability of tax audit. Before going forward, let us just try to understand what is tax audit. The tax audit is a process to verify books of accounts of a taxpayer which have been prepared by them only in order to ensure all the provisions and principles of income tax audit or income tax act has been followed properly or not. And this particular tax audit is required to be done, number one, because of statutory requirement, number two, because taxpayer want to get their income calculated correctly and properly. And it's also important to mention here that tax audit does not give any immunity to the taxpayer, that in future that they are not going to receive any statutory or scrutiny notices, or if their expenses won't be disallowed in future. There isn't any kind of immunity of like such nature. Tax audit is only required to be done by chartered accountants. Okay, now I'll give you how forms have been issued by chartered accountants. So they normally bifurcate between whether a particular taxpayer is audited, is required to be to do audit under any of the provisions, like say for example, Companies Act or LLP Act require companies and LLP to get themselves audited. So if such is the case, then auditor will issue tax audit report in form PCA and annexure in form 3CD. Annexure is required to be issued in all the cases, and in case of non-audit case, non-audit taxpayer, then forms will be issued in form 3CB. Audit report will be issued in 3CB and annexure will be issued in form 3CD. So this is how chartered accountants will decide about which form to issue while doing audit. Now I'll directly jump into the most important part of today's discussion, which is about applicability. Applicability, to determine applicability in income tax overall have bifurcated the taxpayers between business taxpayers and profession taxpayers. In business also, there are multiple section like 44 AE, 44 A, 44 AD, and which is and the last provision, which is audit provision, that is 44 AD. Okay. 44 A is applicable to applying, hiring, leasing business, and there are presumptive rates been given. If they follow that, they are not required to get themselves audited. 44 AD is also presumptive taxation scheme being given by income tax, in which case either 6% or 8% is applicable of the total income. Here, this is applicable majorly to individual HUF or partnership firm. It does not include LLP and businesses which are not eligible to follow presumptive scheme is commission, one who is earning commission business, one who is earning brokerage income, somebody who is running a business of agency are not applicable, are not supposed to follow 4480, and their income does not, and if any SSCs whose income exceed 2 crores, they are not supposed to follow 4480. If such is the case, then they can show their banking income at the rate of 6% of the total turnover, or non-banking income at the rate of 8% of the total turnover, of the total cash receipts or however it is. Okay, so this is section 4480. This is not audit. This was just a presumptive scheme. I've given you a gist about it. Important provision for us when we are talking about audit applicability, section 4480. Here they have bifurcated, not bifurcated. So say for example, who is running a business having income, business income of more than 1 crore. Required to get themselves audited under section 44 AB. However, they've mentioned something about payment and receipt, both in cash. Both are in cash. If the payment receipt does not exceed 5% of total payment. And this is important. And is important because this both the provisions are in conjunction, and total receipt also does not exceed 5% of total. Cash receipt does not exceed 5% of the total receipt. Then the same turnover of 1 crore will be counted. Then the same turnover of 1 crore will be counted as NCI. Then in their case, if their income, business income exceeds 10 crores, only then they are supposed to get themselves audited. Okay, this is how the bifurcation for business has been done. I hope it is pretty much clear. One more particular provisions need to be said here. That is section 44 AD of section 4. So now this provision says that if you have opted for section 44 AD benefit, then you are supposed to follow it for the next 5 years. If you have stopped following it any of the 5 years for following within this time limit, then for the next 5 years, you won't be able to follow. In the year in which you have discontinued, for the next 5 years, you won't be eligible to follow section 44 AD. And section 44 AB says that one who is falling under section 44 AD are required to get themselves audited if their income exceeds more than the maximum eligible limit. So individual HUF, if their income exceeds more than 2,50,000, they are required to get themselves audited. And in case of partnership firm, they are required to get themselves audited. They have stopped following section 44 AD. So this is all. This was all about applicability of tax audit in case of business. Now let us talk about applicability of tax audit in case of profession. So profession may they have bifurcated between 44 AD and 44 AB is the normal provisions for tax audit. 44 AD says that professions. So this is applicable to professions only. Professions who are also doing profession as prescribed in section 44 AD. It says that accountant, chartered accountants, and many professions are being covered here. So this is not relevant in our case to discuss as of now. So people who are into profession under section 44 AA, they can show their income at they can show their income at the rate of 50% if the total turnover does not exceed 50 lakhs. However, there has been one more amendment, although it is not applicable for audit in this particular year, like for audit for financial year 20 to 23 tax audit. But this will be applicable in the next year as it is there. I will just take you through. It says that in case of an SSC where the amount or aggregate of the amount received, it is important to note here that it is only talking about received. If the aggregate amount received in cash does not exceed 5% of the total gross receipt in such previous year. If the total gross receipt is below 5% cash receipt, then the figure of 50 lakhs will be read as 75 lakhs. Then this limit of 50 lakhs will become 75 lakhs. In case of those SSCs whose total receipt does not exceed 5% of the total receipt in cash does not exceed 5% of the total receipt in business. And section 44 AB says that if the total income exceeds 50 lakhs, then the professional is required to get themselves audited under tax audit. It's also important to note one more thing for section 44 ADA, which says that if any of the SSC is claiming carrying on the profession shall, if the profit and gain from the profession are deemed to be profit and gain of such profession under section 44 ADA, and he claims such income to be lower than the profit and gain so deemed to be profit and gains of his profession and his income exceeds the maximum amount which is chargeable to tax. So if somebody is saying that they have income less than 50% of their total turnover and they are below the turnover of 50 lakhs, then they are required to get themselves audited under section 44 AD. I hope what we have discussed today about tax audit and its applicability is relevant and must have added to your knowledge a bit. For more such knowledge, kindly subscribe to my account and like this particular video. I will keep on providing such updates in future as well. Thank you so much. Bye bye.